Oh, you have made it back. You have made it back, and welcome back. Welcome back. I wasn't I wasn't really prepared for the intro, but anyways, we're gonna go over today's price action. Today was a Monday, and what you guys have to know, or what I really had in my mind today, today was a Monday with no red folder news. And if we look at the previous week's candle that we had formed, we had that big displacement move to the downside, and we had that big displacement move on the weekly. So we have a Monday with no red folder news. We don't know what the week will likely do. So I just wanted to let today play out, and I wanted to let today play out. Me personally, I didn't take any trades. Looking back, I do think that there was a nice trade that you could have taken. Other than that, I didn't really see much, and I didn't really want to take a trade. But this is not about how I traded or how I attacked the day. This is about what we could have done better and what we can see hindsight, because hindsight is the best thing about trading, because hindsight is where you're truly going to get better. You're not going to get better if you don't see anything in hindsight. So how do you know what to improve on if you don't see it within hindsight? You know? So that's what I really like about these chart reviews, is that they're just all hindsight, and they're all us just able to come together and kind of see what we were seeing. So all right, so let's look at where we're at when we opened up. I just want to replay this just to kind of tell you guys my bias and tell you guys where we kind of could just anticipate the market to go. Okay, so this is 925. So at the time, we have an SMT at the lows all the way down here. NQ, it had taken this low. ES has not. If you look at NQ at the time of this, and this will kind of tie into my bias going into the day, or going in the rest of the week, but we have taken this low, and now we have engaged this order block and also this fair value gap on the daily. So if we look at the daily, if we zoom out to the daily, this now becomes a point of interest. We also have kind of closed in the lower end of this fair value gap, which is why I think that the draw will be much lower in weeks to come, but that's just in weeks to come. But basically right now, we have an order block. We also have a fair value gap. We also have took this low, and we also have an SMT at the lows. And we also have, if we zoom in to the internal structure, we have another SMT at the lows. So right now, in my personal opinion, I think price has done everything that it has needed to go lower to sell side delivery. We have an SMT at the lows. We also have an overlapping SMT, and we have taken external range liquidity on NQ. So anytime we move from external range liquidity, we are expecting the draw to be internal range liquidity, and that is exactly what mapped out today. That is exactly what mapped out today. We went from a place of external range liquidity. We have the SMTs to support that thesis of us heading into internal range liquidity. And as we can see, this is exactly what ended up playing out. And today is a day, and I also want to talk about this psychologically, because I did not engage on a day like today. I did not trade today. I took 0 trades, and that's okay. I had a thesis, I had an idea that we were to return into internal range liquidity. That ended up playing out. I didn't execute on that. Oh, that's completely okay. There's always going to be another day within the market. There's always going to be another time in which you can execute, and there is no red folder news. A Monday after a big expansion, although we can expect this to happen, there's nothing I can do. Like, I'll say this and I'll say this again. I said this in Road to Funded, but you do yourself no harm by just sitting on the sidelines and by just seeing what price did, because now you have someone to look back on, hindsight, and now you have someone to learn from. And that's what I want to go over today. And I want to point out this candle, and this is kind of what I've been looking at, is that anytime we have a candle with no wick, that is called a devil's mark. And notice how this also lines up with this fair value gap, and look at how price reacted off of this fair value gap and off of this candle with no wick. We end up drawing right into it, and as you can see right now, we are causing a reaction. A reaction. So that's kind of like the hindsight of what happened throughout the day. Let's go in and let's see if we can try to understand what our bias could have been throughout the day. So if we look at the profile, if we look at London and Asia high and low, we notice that there's not really any clear manipulation within here. There's no manipulation in London. We take a high, then we're kind of just diddle-dallying. So there is no manipulation. Ideally, if we come to the market, we want to see, or it all depends, because we're able to capitalize off of everything. But you notice how in Asia or in London, we don't really manipulate the Asia range at all. And we just continue to steady higher. So what does that set us up for in the New York session? That sets us up for manipulation to occur at the Asia low and possibly the London low in New York open. So this is kind of what the profile, I guess you could say, was. And this is exactly what ended up happening. So at the time of open, we have a 15-minute BPR. I did think that there might have been something to take on NQ at the open. I was looking at this in the time of live recording. If you guys go into the live stream, I was looking to possibly take a long. And where was it? So if we look at this action right here, we have an SMT at the lows. We have a 15-minute fair value gap here. We also have a 15-minute breaker, a high, low, higher high, paired with that fair value gap. That's your unicorn setup. We also have a kind of a 15-minute inverse, but I'm not going to mark that in because it's not clear. And at the open, looking back, it just doesn't look the greatest anymore. But we have this 5-minute order block. We respect it perfectly. After that 5-minute order block, zoom in even more to find your better entry. But we end up keying off of this inverse for value gap. We close above this, and then this is what you could have been looking for buy side delivery. We end up taking this high, and that ended up being what you could have called, or what I would have called, an okay entry. Looking back, I wanted to see this, and I also wanted to see us. I wanted to see us play into and key into that 1 hour imbalance. But what does price need to do first? Notice what price did before we keyed into that range. We ended up coming up. We ended up taking this internal high. We form an SMT at the highs. And on NQ as well, there is no manipulation in Asia or London. So where are we likely to draw to when we have not had any manipulation? I want to bring this up as well between days like this. Notice that we have no manipulation within Asia and London. Look at London is failing to really manipulate Asia. So therefore, in New York, we are able to target that, and those become good time-based liquidity pools. Let's look at maybe another example. I don't really know about that, but I know there was here as well is a clean manipulation, or when we don't manipulate and then we end up running it. We have been doing this quite recently, in my opinion. Clean Monday action, I would say looking back, today's action was actually pretty nice. But while I was looking to trade this, I didn't trade it because no red folder news on a Monday. So this is a time where I'm going to be risk off. But Monday for no red folder news, it was really good. Yeah, I would agree. Monday with no red folder news, action was actually pretty clear. But this is all hindsight. Say you come in today and say you put on a trade, you put on risk, and then we end up doing something that you don't expect happening. You're going to get mad at yourself because you traded on a day with no red folder news. So this is, as a trader, when I can just say, hey, I'm not going to take a trade today. We're going to see what happens today. And then everything that happens today, we're going to note on and we're going to see what happened. Today just ended up being a day where we had pretty nice price action. So, sorry, enough of me. After this, we end up coming up and we take this high here. We end up having that SMT, forming that SMT. And then if we zoom in, which I don't love this trade because it's kind of zoomed in, but we end up having that SMT, confirming the smart money reversal. Let's kind of look at the hourly. We're engaging this hourly PD array. We also have this hourly SIBI here. So we engage this SIBI, sell side imbalance, buy side efficiency. I'll call it a fair value. I don't like calling it SIBI and BISI yet. I don't know. I feel like I haven't gone too much into study to like really call it that, you know. So we end up engaging that higher time frame PD array, having the SMT. Looking back, this actually was a pretty good trade because we're within that hourly fair value gap. We have taken these highs here, and we also now have the SMT signifying smart money reversal. So then, if that isn't enough, well, that probably shouldn't be enough for you. You want to see an entry. And as we can see here, we have a 1 minute inverse fair value gap overlapped with a 1 minute fair value gap. What does this now become? This now becomes the breaker block. We zoom in. Breaker, we have a low, a high, and then a lower low. So this now becomes your breaker coupled with that fair value gap, coupled with that inverse fair value gap, also within this order block, which I think it's kind of a little bit too zoomed. That I don't really like that order block as a confluence. As we see here, take a trade here, put your stop at this high because we do not need to come back to this high because of that SMT, and then you could have targeted Asia low. I would have taken the low-hanging fruit with London low, but you also could have targeted Asia low, which is exactly what we ended up taking. And that would have been a good trade. Hindsight. And then we end up coming into London low. This, I'll go over it on ES because it looks a little bit clearer. Here, I'm going to exit replay mode. I don't really need to be in replay. Let's zoom out to the 5 minute. This becomes your second stage of distribution. So say you have that low risk entry up here, then you have your first stage around up here, and this all becomes your second stage, your silver bullet to London low. This could be another shorting opportunity. The draw now becomes Asia low, clearly where we want to head. We're not just going to take, notice ES also, I guess we had taken London low. We want to go to Asia low. All right. So Asia low was the draw. That's what we end up drawing into. And now this is where, looking back, hindsight ends up being a pretty nice trade. So we now are looking and we're waiting. What do we want to see for a reversal? We want to see a higher time frame PD array get engaged, and we also want to see the SMT to confirm that smart money reversal. As we can see here, higher time frame PD array, which is this fair value gap, is engaged. We now have, and we actually do have an SMT here at this low, which I don't love because it's kind of like it's an insignificant low. So let's look at NQ at the time. NQ at the time had taken this low here. It's not the greatest low, but it is a low. Wait. Yeah, we end up taking that. I need to make sure that wasn't tripping. But we come into this fair value gap confirmed with the SMT, and we also have the new week opening gap. You could have used that as a confluence. For me, I'm not going to use that as a confluence, but that's what ends up happening. We come to that area. Now what could be waiting for on the lower time frame? Market structure shift, change of state of delivery, PD array such as that. So I'm gonna delete. I kind of want to clean up my charts. Actually, no, I like this. This is decent. I'm gonna delete this. But we come up into here. We're within that hourly fair value gap, and notice we've also engaged external range liquidity. External range liquidity in the form of the Asia low. Anytime we go from external range liquidity, where are we likely to head to? External range liquidity to internal range liquidity. And this was very clean on NQ. I don't love how we have the gap here, but we have that PD array that's now engaged. We now have the SMT confirming that smart money reversal. We have now taken external range liquidity, and we are now looking for internal range liquidity. Internal range liquidity lies within this fair value gap here. Notice on the way up, we also have highs generated here. Why do the markets move? To hunt liquidity, to rebalance to equilibrium, and also to rebalance to equilibrium inefficiencies. So we can also be hunting this high. Notice if we zoom in, hopefully I'm not making this too overcomplicated, but if we zoom in, we now have stacked highs here that we haven't taken. And if we look on ES, this now becomes your low resistance liquidity. We come in here. The entry isn't the greatest. We have the breaker. We have a high, low, higher high. We have that breaker, which we end up tapping here, which shows us that this is an incredibly bullish move. So, like, if you miss an entry here, it is what it is. It's all hindsight. But I will say there wasn't really an entry, honestly. Maybe 15-minute. Like, if you play this on the higher time frame, maybe. Let's zoom in. Was there maybe an entry? Maybe an order block here. I will say on NQ, there was an entry on the 5-minute that would have been the best. So we come down. We have this order block on the 5-minute. Order block. And you can take this straight off the order block on the 5-minute, or you can wait a little bit. Someone actually said this in the Discord, and I ended up seeing this. I was like, whoa. That's why I like the Discord, because you can see things that other people saw that maybe you didn't see, and you can be like, whoa, they saw that. Why didn't I see that? What can I do better? And this is actually a trade that someone ended up taking in the Discord. We come in and we tap the most sensitive part of OTE perfectly. This also is that order block on the 5-minute, and then this is then when you can look and possibly take this inverse on the 1-minute after you have that extra confirmation. So this is why the 1-minute time frame is powerful if you have context surrounding it. And where could you target? For targets, you could look to target this high. We also have this high here, and then you could also be targeting that internal range liquidity. You are catching that 15-minute distribution leg with 1-minute risk, which is why this trade was pretty good. But it also is hindsight. So that's what I was looking for. That's not what I was looking for, but that's what ended up playing out. This would have been a fantastic trade. Obviously, just go for low-hanging fruit. Take this internal liquidity up here. Why is this also a good trade as well? It's a market maker buy and sell model in an already existing market maker higher time frame buy and sell model. Notice how this now becomes the internal buy side of the curve inside of this buy side of the curve. I took a short on 1-minute fair value gap at 1521. There also was, so that becomes 321. Yeah. I want to go over that at the end of the day. Can you quickly click on your fib settings? Yeah. Hold up. Sorry, one sec. Settings. Those are my fib settings for OTE. And then I'm gonna pull up my standard deviation. I'll just give you all my settings. Standard deviation there. And then I also use concept encroachment, should be easy. I also have this, which I'm not going to go in too much, but it's measuring. But yeah, those are my standard deviation. I got you. So now we have come up into internal range liquidity. That would have been the setup to go long. And looking back, like, there's another clean setup. So internal range liquidity, where can we frame a trade setup off of that external range liquidity? So this ended up being a nice trade. As you can see here, that higher time frame PD array is engaged. That 1 hour fair value gap is engaged. And the only conflict, what would have made this, what you could have expected, why you could have expected, is the divergence between NQ and ES. ES has come all the way up, and ES has taken this high all the way up here, we now have a lopsided SMT, a very very important SMT in an area in which we would expect to reject if we are looking for a reversal. This isn't just a random place in which we're looking to expect to reject. This is that 1 hour fair value gap which we were looking to target. So now we're kind of just seeing what price is doing here. So we have that higher time frame SMT, and then we have a lower time frame SMT. We zoom out to the 5 minute. This would be, there isn't a clean gap within the 5 minute, but now you have 5 minute change in steady delivery. This now becomes a 5 minute order block, 5 minute change in steady delivery. We zoom in. There could have been a 1 minute entry here within like a 1 minute gap here. Also have the SMT. And what would you target? What would you target for this trade? The original consolidation to the left. The original consolidation to the left. This ends up being a nice target. And why is an original consolidation important to target? Because if you zoom out, whenever there is an original consolidation, there will be a higher time frame PD array below it. Watch. Let's zoom out to the 15 minute. What is this now? What is this? This 1 minute original consolidation now becomes this 15 minute fair value gap. So this original consolidation on the 1 minute is that 15 minute fair value gap. That's what price ends up drawing into. I don't like a setup like this. A setup like this isn't as good in my opinion, and I'm not going to look to take a trade like this. But looking back, what can we see? End on day macro, we're expecting to see some form of wick on the daily candle. That's what we end up happening. We come into an area in which we expect to reject that 1 hour fair value gap. We then have that SMT. The divergence really shows us that we don't really need to head lower. We have big divergence. Notice it's not like an internal little divergence. ES has come all the way up and has taken this high. NQ is nowhere near it. We zoom in, and then we have another internal SMT, which that can really tell us and show us that price really wants to reverse. In form of entry, I think Taha was saying that you entered here off this inverse. Yeah, that would have been that. I would have liked that inverse for value up. That would have been a good entry looking back. We break through that inverse. We break through that bear bullish PD array. We now have SMT. We now have things. We now have the market tip in our hand that we're going to reverse. Inverse for value gap, taking that. Stop at here at the SMT, targeting that original consolidation. Looking back, you could have taken that trade. If you missed out on a trade like that, it's totally cool. You don't need to be in every single fluctuation within the market. All right. And that's kind of what I want to go over. That external range in an area or in a PD array that got engaged that we expected that we could reject off of into internal range liquidity. And I really want to dumb down my trading to like even a day like today, you just wait for the higher time frame PD array to get engaged. On ES, it's a little bit clearer. So you wait for that PD array to get engaged, and then that's when you're looking to enter. Then you could have framed an entry off of that. Like, trading doesn't have to be complicated. ICT concepts don't have to be so complicated. We're always moving from external range liquidity to internal range liquidity, or from internal range liquidity to external range liquidity. This is how we get buy side and sell side of the curve. This is what buy side of the curve and sell side of the curve is. External range liquidity in the form of lines to internal range liquidity in the form of gaps. That's what we're always framing into. That's what we're always drawing into. And I feel like we just need to simplify it, and we can use more complex theories and more complex. I blanked. More complex theories to give us a better read on what price wants to do. All right, if we are looking at this right now, just by looking at this hourly chart, this looks pretty bullish. And this is what I was anticipating. This is what I want to see. We now have that 1 hour market structure shift here at this high. This now becomes your 1 hour market structure shift. We now have this breaker that is now activated, this now becomes the breaker. We now have SMTs at the lows. We now have confluences to go higher. Now becomes the breaker on the 1 hour. I want to see us possibly head back up into daily fair value gaps up here. That's what I'm really looking for. Keep in mind that we are bearish. We are bearish. So to go against the higher time frame draw would be stupid. And to try to anticipate us to come all the way back up to here could be foolish. But just by looking at this market structure shift, we've now had displacement higher. We now have this hourly fair value gap. So I want to see what we do here. Do we respect this breaker and then continue to want to go higher into this generated liquidity we have up here? Or do we want to possibly disrespect this and then to head lower? I'm anticipating us to head higher. I'm anticipating the draw to be higher. That's what I'm anticipating going into the next week. Let's look at DXY. DXY, I think, is short-term bearish. Just by looking at this, we have swept highs here, and I think that we're going to do something like this to then head into this low, because this low is that daily fair value gap. Notice how we have taken external range liquidity. I'm now anticipating a run into internal range liquidity in the form of this daily fair value gap. So I'm anticipating the draw to be this daily fair value gap that we haven't come back into. We barely poked that daily fair value gap on DXY. I want to see us kind of actually dig into that to then go higher. Overall, DXY is bullish, so keep that in mind. But just for right now, I could see this being pretty bearish just to go into that low before then going higher. Other than that, today's price action was pretty, or was decent, was okay. Looking back, it was a Monday with no red folder news. I did not trade today. There's no need for me to trade today. Okay, looking back, okay, price action was decent. Price action could have been something. You could have taken a trade. Say you took a trade today and say it went against you, or say hypothetically we didn't get clean action like we did today. Say today's PA was just horrible. You took a trade, you're gonna end up regretting taking that trade. So this is why, as a trader, I'm just not even going to look to engage on days like today. I'm just going to let days like today play out. So today was the day I didn't trade. I'm okay with that. We move on. There's always going to be more opportunity. There's going to be another day within the market. Other than that, I don't really have much else. I am looking for us to... We now have SMT at the highs. We have SMT at the lows. This kind of is a tricky area. Notice on ES we have these stacked highs up here. I would like to see us draw back into this. Let's zoom out to the 1 hour. 1 hour fair, 1 hour breaker, 1 hour fair value gap. This is what I want to see. This is what I want to see happen. Us come back in this 1 hour breaker fair value gap to then head higher. Bro's been watching too much Justin. I'm not gonna lie. I said I was always gonna stick to like 2 mentors, but I haven't really been watching Justin as much. I've been watching someone else. I might gatekeep, but I've been studying, I've been locking in, I've been watching some videos, you know? I've been watching some ICT videos, but I don't think ICT is the best teacher. ICT is a great teacher because he's the author of it all, because he's kind of like the mastermind behind it all. But I think other people that have learned from ICT explain it a lot better than ICT, you know? Why gatekeep it? No, I'm playing. I'll give you guys this is the absolute best video that I've ever watched as a trader. Fundamentally, this is the best video that I have ever seen. This is the best video that you could ever even watch if you're looking at market maker models. Where is it? Imagine it's not there. I think it's live. Where is it? Wait, sorry, y'all. It's by a fees, and it's market maker models. Definitely watch this video, and it's just very nice. It's an hour and a half. That's all I know. It's an hour and 27 minutes. Sorry, y'all. I'm trying to find this video for you. But it's Afiz. Definitely watch Afiz. Afiz is like the greatest teacher I've ever encountered. He is much better than, like, by watching these, like, mind blown, you know? Mind blown. Where is it? I want to find it. I'm going to post it in the... Is it this? No, it's not that. It's not standard deviation theory. Sorry, y'all. Sorry, y'all. I really want... I'll find it, and I'll send it in the Discord. I'll 100% put it in the Discord. What? Where is it? Okay, I'll find it later. I'll send it in the Discord. But, oh yeah, watch history. I'm gonna pull that up on the side. I'm gonna pull that up on the side. I'm playing history. All right, let's see. I really want to find it. Uh, oh, here we go. Here we go. I found it. It just had a different background. It just had a different background. I'll send it in the Discord. It's MMXM Fundamentals. Literally the greatest video I've ever seen on market maker models. If I could tell you to watch one video, if I could tell you one place to start on market maker models, it would be that video. So I'm gonna go and send that into the Discord. I don't know why I didn't sooner, but I'm gonna send this, and I'm gonna tell everyone, watch this and open your eyes. I'm probably gonna watch it one more time tonight. But yeah, definitely a good video. Suspicious. What you been watching, bro? Don't worry about it. Don't worry about it. How do you feel your trading is coming along? Definitely 1,000%. I feel like I'm becoming a better trader. And dude, the greatest way you can become a better trader is to do things like this. When I come on here and I tell what price did, and I go over what price did, okay, maybe I might not be like see every little move within the market, but if I'm able to come on here and if I'm able to kind of tell myself what price is, I don't really care if people watch this. I don't care. The fact that you guys are here, I really appreciate it. Like, you guys, like, I actually appreciate it. Like, I want us to come up together, and I want the best for both of us. So I'm gonna learn. I'm gonna put in the work, and I want us to come up as well. But the greatest way you can learn is to do the reps yourself. Go in there and do the work for yourself. No one in the world is going to do the reps for you. No one is going to do the repetitions for you. No one is going to watch the videos for you. No one is going to do the studying for you. And think about it. Think about it. Nowadays, everyone's attention spans are fried. Everyone's attention spans are fried. Do you think that half this generation is going to sit through an ICT lecture? No, they're going to say that shit's boring. They're going to say that shit's pathetic. But if you actually put in the work, if you train yourself to sit through lectures and actually see what price action is doing and to become a better trader psychologically, you're going to get there. Just put in the works, put in the reps. That's all I can tell you. I am putting in the work. I am putting in the reps. We are going to become a better community, no doubt. No doubt. I like where I stay when trading morning in London session in New York is the afternoon. Nice. And take one trade from each session. Works well so far. Nice. Keep it up. I put in work with you. I promise you. I'm equally as obsessed as you. I appreciate it. As I can see, like you show up to these streams every single day. And just keep on putting in the work. I'm not going to lie. It's hard for me to sit through an hour-long YouTube video. Yeah. Just, bro, remove all distractions, bro. That is what is actually going to make you better. And it may not seem it like if you're watching a lecture or if you're watching like, because I've been there before. I've watched like ICT and I'm like, this guy's boring. This guy sucks. If you actually go through it and if you actually take notes on it, because what I'm gonna give you guys some sauce as well. The greatest way you can become better is by taking notes. So what I do. And this is what I want you guys to do as well. And this is what well, you guys don't have to. I just recommend it. So you have your notepad here. I have a notepad to where I write down my notes. And then what I go back in is I have Notion is to where I can go back in and then I can go in and then I can create these notes in Notion. So now I have these notes in Notion. So I've already taken the notes before. I've written down the most important parts of the video, and then I'm going back in and I'm refining that information, and I'm able to, like, this becomes a lot prettier. This becomes a little bit prettier. Liquidity imbalance theory. What is that? Why does the market move? This is vital to question where to enter. The market moves in one of two reasons: to liquidate orders, which is for us to hunt liquidity, and to rebalance the inefficiencies. We are always doing one of two things. We are hunting liquidity or we are rebalancing to fair value gaps. We are rebalancing to fair value gaps. We're always doing one of those things. So external range liquidity, we know that sell stops rest above old highs and old lows. We know that hedge funds and traders have stops resting above these highs and lows. In order for smart money to move the market, they need a counterparty to fill their positions. This is very vital. So in order for the market makers to get filled, they have to push the market to an area in which there are orders resting. Where do orders rest here? In Asia range. Asia range, we know that there are a large amount of orders resting here. We know that retail RICs have their stop loss below here, and even large institutional funds have their stop loss orders resting here. So in order for price to move lower, or in order for us to go higher, which is where smart money ideally wants to push price, they're going to push price lower, and they're going to buy within here. They're going to buy within here. Smart money is going to be buying within these down close candles here. That is why an order block is an order block, because this is where the buying really occurs. Smart money is buying within here. They're buying within here. They're buying within the wicks here. And then they are selling their orders back within this expansion. So now, this order block here is going to be very sensitive because we have engaged this PD right here. We have gauged external range liquidity. We have engaged this fair value gap here. So this order block is what I'm really looking and anticipating to see price head back towards. I want to see us head back towards. And notice what makes this a high probability order block. Why is this a high probability order block? Because it engages a higher time frame PD array. It engages a 1 hour fair value gap. Let's scroll down here to my notes. Smart money is actually selling or buying the market in up close and down close candles. This is why the theory of an order block works. We know that the buying truly occurred within these candles. This is where smart money is engaging. Think like an institution. Think like smart money. Think like smart money. Where are they going to be buying? They're buying within here. They're buying within here. And then when price comes back into here, this is going to be very sensitive and we're going to end up rallying. I'm going to put this I'm going to put this out here into time. price is going to respect this order block very nice. We're going to end up getting bought up. This is now your market maker model. This will happen. This will play out for the rest of the week. This order block is going to be very sensitive. I'm going to take a trade off that order block. And I'm going to zoom down to the lower time frames. I'm going to get the best risk. And I'm going to take a fantastic trade off of that order block because that's where smart money is truly bought. I'm not going to lie. Did you pass the funding account? Not yet. I'm playing it slow because I don't care to come into the market. I don't care to pass my funding account. Every day when the market opens up, my focus is not even on passing the funded account. I don't care. I don't care. I don't care about passing a funded account. No, I don't care about making money. There's always going to be another day within the market. There's always going to be another trade that you can take on. So, like, I don't care to pass a funded account, so I'm taking it pretty slow. How do I join the team spaces on Notion? What do you mean? I don't know. Notion, all I have is just my personal. These are all just my personal. My trades, peer review, my trades, things for me to work on, setup review, weekly self-improvement, which my knowledge as a trader, which I'm going to expand on, possibly build upon that, because you don't know, like, I just like having my notes all together, and Notion is a good place to do that. I'm going to delete this. I don't need this. No, team spaces. I have no clue. Oh, is there a way to like collaborate notes? Is there a way? Above the notes. Oh. Ooh. Yo. Should we do this? I didn't know that. Should we have like a group notes? I don't know. I feel like there's going to be like some troll that just comes in and deletes it all. But I feel like there has to be like limitations on like maybe only I can delete notes. There's got to be some type of troll that just comes in. And or maybe what I might do is I might announce in the Discord like, hey, we're going to collaborate on notes. DM me if you want to, and then I'll put you in there to where I'm not just gonna like have a link in my Discord to where like not anyone can. Like you're gonna have to DM me, and I'm gonna do that. Yeah, that I'm gonna yeah. I wanna do that. I didn't know that you could do that. I'm gonna look more into that. Is there a engineering wiki? Do you know how this works at all? So is there a where when we can like all collaborate and make notes? Or is it not that good? Not just the basics? Alright, it's cool. Yeah. I don't know. This might be cool, but at the same time, I feel like notes are only beneficial if you actually take them. Like, if you actually take them. They're only beneficial if you actually take them. If you actually do them. Like, you're not going to have any beneficial by looking at someone else's notes. Like, yeah, you can copy their notes, but you're really going to find the most benefit by creating your own notes. So I don't think I will do that. I don't think I will do that actually. But yeah. Anyways, I'm expecting this order block to hold because we have induced, and this is looking very nice. We also have another SMT here, so this is looking like we're gonna have buy side of the curve. First stage or low risk entry, first stage, possible second stage up here. So I will catch you guys in the next one, in the next chart review. Hopefully you guys like this chart review. If you guys didn't, that's completely okay. I'm going to be improving. I'm going to become a better trader. Like, do not by any means think that I am a finished product. I'm always a student. I'm always learning. I'm always growing. I'm always becoming better. Always. Price also rebalances equilibrium. I would say so. But I will say that price more moves from external range to fair value gaps. External range to fair value gaps. Hunt liquidity to rebalance to inefficiencies, also to rebalance to equilibrium, but you can also dumb it down when you're looking for a market maker model. So when I'm looking for a market maker model, I'm just looking for external range and then internal range liquidity. So you can dumb it down. And I would definitely recommend watching this video. Definitely. It's probably the best video I've ever seen. Best video ever. Like I'm not even lying. It's like it'll blow your mind. It'll blow your mind. All right. Hopefully y'all have a good rest of your night. I will catch you guys later.